Welcome, dear traders, it's me, Kate Stichina, and you are watching a recap of the Asian session. Early Thursday, stock markets slid into negative territory. After negative signals from Wall Street yesterday, Australian and the Japanese stocks also faced strong bearish pressure. The US dollar was trading in the sideways channel without making attempts to rise. And let's discuss what happened in the Asian session in detail. The US stock indexes rolled back following the speeches of Fed policymakers. All four Fed officials said that the fight against inflation is not over. Optimism on Wall Street warned amid the chorus of hawkish statements. However, Fed Chairman Jerome Powell made less hawkish remarks than expected earlier this week. He highlighted that shifting to a slower pace of rate hikes would better allow the FOMC to assess the economy's progress toward its goal. As a reminder, the regulator's top priority is to bring inflation back to the 2% target. Overall, all these statements, as well as the prospects for monetary policy, look very contradictory. Nevertheless, the CME FEDWATCH tool signals a more than 90% probability of another 25 basis point rate hike next month. The next Fed meeting will be held on March 22. Now investors are looking forward to the inflation data, which is due next week. In any case, expectations of a policy reversal are likely to limit the upside potential of the US dollar. US government bond yields may also lose luster with investors. US Treasuries and the greenback are the most popular safe haven assets. Therefore, if one of them falls, the other follows suit. Given the consolidation of the US dollar, the yield of a 10-year US bond notes snapped a 3-day winning streak, declining by almost 2%. As a result, the US dollar was unable to gain momentum yesterday, so it slid into a sideways channel. In the morning, it tried really hard to settle above the resistance level of 103 points. In the Asian session, it was trading at 103.30, and the greenback somewhat stabilized versus its main rivals. It was moving in the price corridor of 103.20 and 103.60. The yen also slipped in a narrow range. It did not miss the chance to climb versus the greenback amid the fall in the yield of the US Treasuries. In the Asian session, the dollar-yen pair was trading at 131.20. Currently, investors are waiting with bated breath for the announcement of candidates for the post of the Bank of Japan governor. Each new name stirs excitement on a forex. Therefore, traders are now cautious. The yen is moving in a relatively narrow channel of 131.00 and 131.80. The Australian dollar also managed to climb. Oil prices are recovering, pushing commodity currencies higher. The AUD USD touched the psychologically important level of 0.70 amid a strong bullish bias. However, it failed to rise above this level in the Asian session. The pair was trading slightly lower at a 0.6971. On the daily chart, it was moving in the upward range of a 0.6922 and 0.6975. Although the pair is trading with a strong bullish momentum today, technical indicators signal that it won't last long. The long-term trend remains bearish. Therefore, if the pair dips below the resistance level of 0.70, it may resume its decline. The nearest support level is seen at 0.6920. The New Zealand dollar also regained a bullish momentum. Commodity currencies have a similar reaction to the news from the United States and China. Of course, there are some differences in their moves. However, in the Asian session, the kiwi is also stuck in a narrow range of 0.6303 and 0.6369. Although it was trading at 0.6368, consolidating above the weekly low of 0.6271. one. It was quite difficult for the Aussie to rise higher. If the Fed is really approaching the end of its tightening cycle, the US dollar is likely to go through hard times. The rivals are sure to take advantage of its decline. If you want to determine good entry points and increase your profit, it's crucial that you have the latest market news at your fingertips. The Bank of England monetary policy meeting is scheduled for today. The European Commission will publish its economic forecasts, and the United States will unveil initial jobless claims data. Subscribe to the channel and keep close tabs on the market developments with us. See you soon.